Hello guys, this trade right here is an SP500 trade taken today on 29th of July FOMC. So this is a pre-FOMC setup, and I want us to break it down together from the daily chart down to the entry which was taken on the 5-minute chart. So let's do it together, and we see how I got to that trade. Okay, so we'll start off by deleting everything so that you guys can just understand the whole concept that I used. So yeah, let's do it. I'll delete everything and start from the daily chart. Okay, so I can even start from the weekly chart because what we've just cleared was one of the weekly draws on liquidity which I was targeting, and currently we are heading to the next weekly draw on liquidity which I was targeting. So let's see how I got to that trade. So uh, on the weekly, previous week we had this huge displacement candle to the downside. So basically, coming into this week, I was expecting a continuation of that to sweep the previous week low, and then this week, and then this week low. So on Nasdaq US 100, we also had the same situation on the weekly chart. We closed below the previous week's candle, so I was expecting a continuation of that, and I expect that to go at least to this weekly fair value gap or this weekless candle right here. So that was my view on the weekly chart, and those were my draws, my weekly draws only, my weekly draws of liquidity. So let's go down to the daily chart and see what we've been having since Monday, Tuesday, and then today when we took this setup. So I will also delete everything on US 100 as well so that we can just do it together, everything together. So now on the daily chart, what we had is right here on Monday. I was not trading. As I said, I wanted to get a feel of what the markets want to do for the rest of the week, and what I got solidified my bearish bias, and this is the main reason why. You can see that we swept Friday's high on US 500, and then we traded back inside that range. Okay, so on US 100, we had the same thing. You can see that we swept that high and then we closed back inside that range. So already we started with a liquidity sweep on a Monday. And when you see a liquidity sweep on the daily time frame on a Monday, that is a high probability for a week that is going to displace to the other side. Okay, so especially if you have several draws of liquidity on the weekly time frame, if you see this happening on a Monday, then that is a very good sign, and you can start looking for positions on the next day. So you can see that we swept that, traded below, and closed below that the previous day candle. So same thing here, we were not able to close below the Friday's candle, but we did displace lower. Okay, so that was still a very good sign of price action. So coming into Tuesday, yesterday, I tried to actually trade on SP500, but the trade failed, and I will show you that in a few. So Tuesday, yesterday, you can see that it was somehow an inside day on both assets. Was it on both? No, it was an inside day on one of them, but also this one came back to close inside Monday's range. But that was not a problem because my weekly draw on liquidity, I was still targeting the fair value gap and then these lows marked here, as well as the one that has just been swept. Okay, so this was the previous week low. That was my first draw on liquidity. Okay, so let's go down to the 4-hour chart and see what actually we could see. So on the 4-hour chart, I talked about this in the weekly outlook, in the daily outlook video from yesterday and also today in the morning. So you can see that we had this new week opening gap, and this new week opening gap is like I made a thread about this one on Instagram and also on TikTok, and I posted it as well as Twitter. So this new week opening gap can be used as a target and also as an entry zone to look for a displacement. Okay, so in this week's price action, we are using this new week opening gap as a point of entry. So let's go deep into that. So you can see that when price opened with this gap, immediately on Monday at 6 a.m., we were able to trade inside that and close below it on Monday by the AM session. Okay, so that was already a sign for me that price was going to continue displacing to the downside. So coming into Tuesday, we got this huge candle retracement, and That is why I'm telling you, yesterday on Tuesday I tried to take some trades here, but they failed. But we got this retracement into the new week opening gap, which already is a very good key level to use for your entry to target the weekly draws on liquidity. Okay, so we had the same new week opening gap on Nasdaq, and you will notice that on Nasdaq we have not even revisited the new week opening gap. So that is actually a good sign. If you're trading correlated assets, for example US 100 and US 500, you want to see such a thing happening, especially if you're looking. So for example, in this case we are looking for a displacement to the downside. So you really want to see something like this happening. You want to see on one of the assets we are failing to retest that new week opening gap, while on the other one we are really retesting it. So that is some kind of SMT that covers fair value gaps and such stuff. So on correlated assets, so it's a type of SMT, okay, SMT divergence, where on one of the assets we will revisit the gap or the fair value gap, and then on the other asset we will not revisit the gap or the fair value gap. So let's go down to the 1 hour chart and see how price was reacting there and how now we actually got to the trade. So the new week opening gap is there. So let's I will avoid doing the, so we can actually start with yesterday's trade and then we can come to today's trade. So yesterday at 8:30, remember I'm trading the 8:30 candle. So at 8:30 I wanted us to, at 9:30, 8:30 I wanted us to sweep this high, the high that had been formed right here, and then displace to the downside. So on US 100 I also wanted us to see that sweep happening before we displace to the downside. So we had this high, the previous day high right here, which was not swept, and we can mark that as Monday's high. Then on SP500 we can also mark the previous day high. So I wanted to see the previous day high being swept and then get a reaction off of that and trade to the downside. So I did mention today early in the morning that I got a break-even trade on SP500. So here is how it happened. You can see that on sorry, let's go back to the 5. Was I in the 1 hour chart? Yes. So yesterday I was anticipating at 8:30 or 9:30 open to get a sweep of the previous day high, which was Monday's high, this, and then after we get that sweep I could look for an entry to the downside. And what happened at uh, exactly 8 a.m. around 8:30 we got the sweep on SP500. Okay, so we got this sweep on SP500 right here, you can see at 8 a.m. and then price started to displace to the downside. So let's go to the 5 minute and zoom in on this area so that we can see what we have at that area. So this is the candle that swept. So let's go to the 5 minute to see what we have in that area, okay, in that area of price. So this is the area that I have shaded on the 1 hour chart. So we are now in that area, and I want us to break down price in that particular zone, because this is the most important piece. It is the one that sweeps that liquidity, okay, the previous day high. All right, so notice, be very keen on that. These are the candles that sweep the previous day high. So that is where you start looking for entries if the time is aligning. And look at the time, it was 8:25, 8:30, so it is already within my time window of taking trades. All right, so as soon as that sweep happens, I go to this candle. This one becomes my last up close candle, these two candles, these two bullish candles. So let me delete this because we are already in that area. So these two candles become my last up close candle, which should become an order block if we get a change in state. So you can see that we do not get a change in state at 9:05, and then we go over and then up to 9:20. So at 9:25 we get a displacement, a huge displacement to the downside. So that is where we get that change in state of delivery to the downside. Okay, so this becomes a 5 minute change in state of delivery, which means that I should have taken that entry here. Okay, but unfortunately I was not able to take that entry there. So I took a later entry because I really wanted to see what 9:30 open will do, because look at the timing. This is 9:25 and we have already gotten the change in state. So usually at 9:30 we might get a secondary sweep. So what is a secondary sweep? Secondary sweep occurs when we have already swept the previous day high, for example, a major sells buy side liquidity, and then we get another sweep on the candles that swept liquidity, so that becomes a secondary sweep. So that is what I was expecting yesterday, and that is why I delayed to take this entry. So on the other hand, what did 9:30 actually do? So 9:30 actually displaced further and confirmed this change in state. So that became my cue to enter the trade, because if we are displacing this way, it means we are not going to have this secondary sweep. Additionally, no, yes, it means that we are not going to have that secondary sweep. And also, when I looked at US 100, which had formed the SMT, because we did not sweep the previous day high, okay, we did not sweep the previous day high on Nasdaq. All right, so this is the previous day high that we marked here at 28 100. All right, so you will notice that we never swept that. So let me just zoom it in so that you guys can see. If I'm talking a bit too fast, I'm sorry. I'm just trying to make the video as short as possible. Okay, so you can see that right here, we did not sweep this liquidity to the upside. So that became an SMT. Immediately, it became an SMT. And now I went to the 5-minute, and this is why I did not take the trade on the asset that did not sweep. I did not have an area of clear stop loss. So that is why I took that trade on SP500. So you can see that also on this asset at 9:30, we continued to displace further. So that immediately told me that we are not going to have that secondary sweep that I was waiting for. So that being said, on the 5-minute now, back to our area, this was our zone. So remember, we already have our 5-minute change in state of delivery right there. And then the 9:30 candle has opened with a huge displacement to the downside. So immediately I knew that we were going to get a small retracement, and I was going to enter as price was retracing. So my entries were spread out between 74.07 to around 74.14 or 74.11, somewhere there. So of course, my first take profit has to be at 1:1, or the next draw, or the next hanging low hanging fruit, and the next low hanging fruit was here. Okay, so this was where my next low hanging fruit was, and that is where I took my first take profits. It was a 1:1. It was around a 1:1, because I had an entry at around 74.01. Yes, so yes, I took my first partials there, and then immediately I took this. Price started to retrace with a lot of momentum, so I kind of brought my no, I did not move the stop loss on yesterday's trade. Okay, sorry about that. I've remembered. Yeah, so I took partials here. So I had 4 positions. I closed 2 positions right here at 73.86, and then I left the other ones open on stop loss. Okay, so when it came back and stopped me out right here at 74.30, it meant that I took I took partials on 50% of my positions, and I got stopped out on 2 positions as well, 50%. So that means it was a break-even trade, no loss taken. And yeah, so that was it. That was the trade that I took yesterday, and that is how the trade actually went. But if you look at it, if I would have entered that trade here at 74.17, then I would have achieved a total of 2.4. So I would have closed most of my positions before price started reversing, but that was not the case. And the reason is simple. I wanted to see the 9:30 candle do maybe a secondary sweep. I was expecting that. So with what I've been seeing in these markets, with the time that I have been able to experience these markets, I understand that maybe sometimes at 9:30 we do have that secondary sweep, and I was not willing to risk that. I was willing to wait for that confirmation. I was willing to lose these pips, this number of pips, 74.17 to 74.06, so around 100 and something pips. So I was willing to risk that number of pips just to get that confirmation, because like I have been telling you need to enter low risk positions. If I would have entered here, it would have been a very high risk position. Although it would have been high reward, it would have been a high risk position. So I was not willing to do that. Okay. So that was yesterday's trade. So let's get down to today's trade. Okay. So I was still very sure on the higher time frame, on the daily chart, that nothing had changed. So I was still going to look for short positions throughout today before FOMC, because remember, I do not trade FOMC. I only trade pre-FOMC and then I leave the market. So today I was still looking for the same short positions, and I came in looking at that. And I mentioned this in my daily outlook today. I actually mentioned where I wanted to see this price getting a sweep. I wanted to see this sweep happening at 74.67, but it did not happen. So we will delete our new week opening gap because we know where it is and it has not been invalidated. So we can just keep it out of the chart just to maintain the cleanliness of that chart. So let's see what London session did. You can see that during the London session, we got this displacement, small displacement to the upside, and then price immediately at 6 a.m. gave us a 1 hour change in state of delivery. So coming into the New York session open at 9:30 a.m. open, what I noticed, the first thing that I noticed is that price had displaced too much to go back to the upside. Okay, so we were not going to have any liquidity sweep of this previous day high. So today the liquidity sweep had occurred right here, this small liquidity sweep that you can see on the 15-minute chart. That was enough. Okay, but let us not dwell on that. Let's look at how I actually caught that trade from the top. So coming at 9:30, I noticed that we have the, let's go to the 5 minute. I will break this down at the 5 minute because you have already understood why I'm looking for sales. It builds up from a Monday, from the weekly to the daily to the 4 hour to the 1 hour. Now I'm coming to the 5 minute at 9:30, 8:30, just to see how price is interacting with internal highs and internal lows to see where I'm going to get an entry. So I was saying that on the 5 minute, what we had was yes, on the 5 minute at 9:30, I wanted to see how price will reacts with internal highs, internal lows, to see if I can get an entry. So let's mark the 8:30 open. The 8:30 open was right here at 8:30. So this was the 8:30 open candle. We opened with that bullish move to the upside, traded higher, reacted from this fair value gap right here. So we will mark that this is a breakaway gap. We'll mark that we interacted with that fair value gap right there. And then at 9:30, now the most important, right here at 9:25, you can see that we started to displace lower. Okay, we started to displace to the downside, right? So once I saw that happening, I looked at Nasdaq US 100 to see how it had interacted between that time window of 8:30 to 9:30. So I will actually use two vertical lines to mark that. So let's mark the 8:30 open and the 9:30 open between that time window and see how price interacted. So this is 8:30 and then we have 9:30 right here. So what do you notice between these two price actions? What do you notice between that and this one? I should give you a minute to tell me what, or maybe just tell yourself what you noticed between those two pieces of price action. Okay, so this is the 9:30 high, this is the 8:30 high, and on SP500 you can see that we made a higher high. Okay, so that was the signature. We made a higher high between the most important time windows in the New York Open. We made a higher high. Okay, so that becomes an SMT. We made a higher high and we made a lower high on SP500. So immediately we see a switch in strength between these two, because yesterday, remember, Nasdaq was the one that was not sweeping its highs. Okay, and today now it's SP500. So that's a strength switch, and that becomes an SMT right there. And as soon as I saw that, and it was 9:30, I just you know the next thing that I did, I mark out the last up close candle. This was my last up close candle. So immediately that happened, I marked out this as my last up close candle. And then, okay, sorry, just went too far. So I marked this as my last up close candle, and then as soon as I marked that, now I waited for price to do what it was doing. So at 9:40, you can see it right here, at 9:40 we got that we got this close below that candle. So that was a change instead of delivery to the downside. All right, so we got that 5-minute change instead of delivery, so we will mark it as our 5-minute change instead of delivery. And today I got it exactly where I wanted and even higher. I got some positions around here, 74, 25 and 23, because as it was opening, it was able to retrace a bit higher. So where was my stop loss? Where was my stop loss? Of course, my stop loss is at the protected high. I taught you about this in the SMT crash course. So the high that has not been swept becomes a protected high. You do not want to see that high being taken off, and if it does, then it means that setup is probably invalidated. So this is why I took the setup at 74.21, between 74.21 and 74.25. Okay, so it was a short position right there. Stop loss, a very nice stop loss right there. How many pips? Let's see how many pips we were risking. I think it was 100 to get around 500 and 400. Yeah, this was 140. Then let's mark, remember our targets, so of course your first take profit has to be this low. Okay, you have to take partials here, that's a rule. You have to take partials. So this is where my take profit one was, and if you have seen my screenshots, you will notice that that was where my TP1 was. Yeah, TP1 was there, and how many pips was that? No, it was a 1:1. Oh yeah, sorry, I had my positions were a bit higher, 74.24. Yeah, so because I remember I was getting around 1:1.2 for my first profits. So yeah, that was my partials there, right there, at 1.3 r, something like that, roughly something like that. And then my next target was where these relative equal lows, you can see this low, and this low, those are relative equal lows. So immediately that is where I place my relative equal lows. Then I don't think there is anything else to see there. So relative equal lows was my next target, which was at around 3.2 r. Okay, very nice. So, and then my next target was the previous week low, which is this one right here, 73, 70 something, 75. Okay, so that was my final take profit as another draw on liquidity. And you can see that as we are speaking right now, as we are talking, as I'm doing this video, price has gone to the other draw on liquidity, which was lower. Okay, so let's look at that. Let's look at how that is unfolding. Let's just look at how that is unfolding real quick before we continue. Okay, so remember I had told you I wanted to see price going where? The previous week low, this liquidity, and then this one, and then this one. So you can see that we have now cleared two draws of liquidity on the weekly time frame, number one, number two. Okay, so yeah, I was just showing you that. So let's go back to our setup. So yeah, my other take profit was here at 73.75, which was here at 3.84 r setup. And yeah, so basically that was how I was able to catch this beautiful trade, 500 pips. Yes, 500 pips, while risking only 120 pips. So yeah, it was a good trade. 4 hour setup, 5 hour setup, around something like that, because I remember on one of those trades, I was on one of the entries, I was only risking $10, and I was able to come off with almost $52 on that trade. So that shows you that I got a 1:5 risk reward on some of the entries. So yes, that is how I got this trade. This was a textbook 2022 ICT model entry, the one where you wait for 9:30 open, you look at the sweep, compare the two correlated assets, enter the one that hasn't swept, stop loss on the protected high, and you're done. So yeah, that was the setup, and I hope you've learned something. If you have any questions, drop them in the comment section, and or my DMs are open. Yeah, so I also wanted to show you guys my journaling. Uh, so now let's journal this trade together. Okay, I almost forgot about that. I wanted to make that part of this video. So uh, let's do a journaling video, and let's journal together so that you guys can see how I journal. And I will have to start again because I just will have to start again. So I will delete this. Okay. So let's journal this trade, and I use Notion to journal, and you can see that this is Notion, a private, only I have access. This is my trading journal, and we can see the example from yesterday. So yesterday this was the trade. Gold type of trade was a short trade, then the outcome was a loss. The RR, I'm using amount, so I'll put a negative $30. I'm currently trading a $500 account. It's not much, but it gets by. And yeah, files and media is where I add my screenshots. So let's see if that can open up. So you can see this is yesterday's trade, and then we can go and open the next screenshot. So the next screenshot shows the progress of the trade, which was topped out. I had adjusted, I closed it manually, so that's why you will notice a difference in where the stop loss positioning is. So you will also see I also add execution, MT5 execution there. So I have those three. And then for the comments, I add all the rules, blah blah blah. Yes, so yesterday all the rules were followed apart from, oh, but the trade was missing an SMT. So yeah, story for another day. But yeah, that basically is how I journal. So I want us to journal this trade together so that you can see the whole process in real time. Okay, so we have S&P 500. That is will be the title, and then I will come here. I have only the three assets that I trade only Nasdaq, SP500, and gold, only those three. So today's trade was on SP500. The type of trade, I have two types of trade: a short trade or a long trade, which is a buy or a sell, a buy or a sell. So today's was a sell, which is a short. I will put it as short. Then the outcome, I have three outcomes on my trade: a break even, a win, or a loss. Okay, so it's that clear, that simple. So today's trade was a win. So for the RR, I have told you that I started using the particular amount instead of just putting, for example, today's trade was a 3.8 R, something like that. So instead of putting 3.5 R plus 3.5 R, I started using the actual amount so that I can track my progress better. So today is dollar, sorry, it's a plus 188. I made $188 on that trade. So we are up 188 on that $500 account. And then what else? So let's go down to the session. So this is the next category. So the session is New York. And then I will now go to the next section, which is files and media. So for the files and media, as I have told you, I add the screenshots of the trade. So my first screenshot is when I took the entry or close to where I took the entry, because sometimes you're not able to take it as quick as possible as you are also trying to take entries on MT5. So your priority is not taking screenshots, it's taking the entries. So this was the first screenshot that I took at 4:48. So we will add that. And then I will just show you when it opens on here, over here on Notion. Okay, so we have a date, asset, short, win, the amount. Then you can see now this is the first screenshot that I have. You can see where I explained my stop loss was just above the protected high. TP1 was just at that low 74,006 around there. So yeah, you can see this is the trade breakdown that I have shown you. All right, so you can see that I'm not talking in hindsight. This is something that I actually did. Okay, so well, yeah, let's close that. Sorry about that, guys. Sorry. I hope we are back on OBS. Yes. Okay, so I will add the second screenshot, which is a progress of the trade. Usually I take this uh, when I take the first partials, which is TP1, which my partials are usually just at 200 pips. So yeah, let's do that. And that was at around 520. So this should be the screenshot. Oh, no, not 520, 455. Yes. So yeah, that will be my second screenshot at the files and media part of my trading journal. And then we can now see, we will now look at what? Let's look at, yes, let's look at that screenshot that we have added. So you will notice that this screenshot has been taken after price has pierced through take profit one. So that is my second screenshot. And then for my last screenshot, I add the MT5 executions because I really noticed that my execution was very poor over the months of maybe the first quarter of the year. Yeah, so I really wanted to improve that. So the only way to improve on anything is to just note it down. Okay, so just include it in your journal so that you can observe it. So I decided that I would be adding that to my Notion and just going through that execution to see how I have been doing that. So today's execution, you can see that it was impeccable. You can see that we got in at 3-minute week. You can see that most of these entries are on the week, right? So it means that we got in as price was going to the upside, which is a very good entry. So yeah, entries, partials here, TP1, more partials, then full TP here and here, right? So yeah, I think we're probably done with this part. So that is how I add. I need to add this part because it's important. It's very important that you observe your executions, because you could be having the best strategy but your execution is a trash, so you need to work on that also. So it's an important part. So we come to also checklist, which is a very important part in my journaling journal in my journal. So for my checklist, I like to tick the things that I want. These are the checklist is what do you want to see before you enter a trade, and I need to confirm it's either a reversal or a continuation. Has a key level been hit? For example, an order block, a fair value gap, etc. So let's do that together. Today's trade was a continuation because we are bearish and price was just dropping, so we were just catching a continuation. So correct. So key level, okay, key level was the fair value gap, so a key level had been confirmed. That is correct. And then a liquidity sweep had occurred. That is where we got the SMT. So yes, the liquidity sweep was there. So a 4-hour change in state or a 1-hour change in state. We had a 1-hour change in state that had occurred during the London session. I had shown you that. So yes, that was present. And then we have an SMT which was present. So yeah, for DXY, I use it when journaling for gold. So yeah, uh, my checklist only has those things. I I do not have a time as a checklist because I never take trades out of my time zone. So or out of the New York session, not New York session, out of the kill zone. So I know that time is already in my head. So it's something that I already know. It's obvious. If I took that trade, it was within the correct time. Okay. So yeah, now I come to the comment section, and in the comment section, I just like to add maybe a short comment about the trade and how I handled myself. So today's comment will be it was a good trade executed I executed well, and it was a good trade, and all rules were followed. Then we just say on to the next, because yeah, so yes, that is my journaling process. And I want this to scroll back to the upside, but it's frozen up. Okay, so the date, asset, the date is automatic, so I don't need to do anything there. Asset, the trade, the win, blah blah blah. And yeah, so we are done. So this is how it looks. So you can see that for the week, this week 27, uh, I've only taken 3 trades. This one was a break even, this one was a loss, and then we have this beautiful trade from today, which is a win. So yeah, I'm done for the FOMC day. I have basically I did the daily outlook, waited for New York Open. I traded the New York Open with my VIP team, of course, sent the setups, and then now I've done this outlook, shared this breakdown. So I am done for the day. I will not be trading FOMC. And like I told you, I really do not follow the fundamentals anymore, because I noticed that it's a curveball thrown to retail traders just to take you out of your game. So I'm really focusing on just my technical skills and just my execution skills, and then just polishing my psychological edge, my mentality as a trader. So that is all for today. And yeah, keep subscribing, keep joining the Telegram channel. Let's do great things together. I hope you enjoyed this. I hope you enjoyed this. Like I said, any questions can be dropped in my comment section or my DMs. Or yeah, see you on the next one, guys. See you on the next one, manze. Yeah.